9:30 bell, I'm already dialed. Sweep the highs, watch it fail, fade the trap. Dow trader, I just read the map. Two trees, flat by lunch, never miss the rail. Dow trader, liquidity's mine. Green on the day for your coffee's on time. Let's go.
Okay, let's quickly go over the Google chart because I think it's ripe with opportunity. On Friday, we saw a pretty hard sell-off right into close, and it sold off and closed below 381, which is the neckline of like a head and shoulders or whatever you want to call it, some type of reversal pattern up at the top. So we opened up, gapped up today, closed the gap, got a gap fill reversal, came back to the bottom. After market close today, if we switch over and turn on extended hours, you can see that there was kind of a big sell-off, came up to the bottom or to the top of this previous gap, but has started to recover. There's still quite a bit of time between now and market open tomorrow, so we don't know exactly where this is going to open tomorrow, but there's a lot of opportunity. And the reason there's opportunity is not only because we have closed below this neckline and officially got a lower high below this neckline, but also if you look over to the left-hand side here, we have all this thin structure and this huge gap. And we've got the previous all-time high here at 349.15, which is the ideal spot for a higher low on the daily chart to continue the uptrend from a daily chart perspective. So we'll go over the different scenarios and how I think Google will play out, in my opinion. So let's assume that we do not open with a gap tomorrow, but we open somewhere near yesterday low a day because that's based off overnight activity so far. That's the most likely spot we'll probably open up if we're in range. So if that happens, what I'd be looking for, maybe some type of consolidation right here to kind of make a bear flag would be one scenario. Then maybe we pop above yesterday's high a day real quick, come back down, lower high back below yesterday's high a day, then come down, lower high below yesterday low a day. Either one of those good spots to get in. Come down, target the top of this previous gap. Scenario number 2, open in range, pop up over yesterday high a day, then come back all the way up here to 381 to retest 381, and we either reject it immediately or pop above it, then fall back down below, get a lower high below, come back down, target yesterday high a day, lower high below yesterday high a day, target yesterday low a day, lower high below yesterday low a day, target bottom of the gap. Both scenarios, or top of the gap. Both scenarios we're targeting top of the gap, right? All right, the next scenario, let's delete those. Those are the we're opening in range scenarios. Well, there's one more scenario that could happen here that we should at least account for. The other scenario, open in range, come up, get a clear higher low above 381. If this happens, I think that is a good place to get long. And then in theory, this move down here becomes the lower or the higher low on the daily chart. I think most likely we're not already to the higher low on the daily chart, but we could be. Maybe hitting the top of the gap in after hours was enough. Could be. All right. So that's the possibilities for opening in range. If we open gap down, let's go over how I would trade that. So if we open gap down and let's say we open near the top of this gap, let's call this right here the overnight low, and that is about where the current overnight low is. And then we'll call this line the opening print, which is just wherever market opens at tomorrow. All right, so from there, if we open here, gap down, let's say we come down, try to trade downward below overnight low and possibly into this gap a little, but that fails and we come back up and get a higher low above the overnight low, or we get back above the opening print right here, then that would probably be a fair spot, in my opinion, to get long to try and close this gap, my stop loss being this below. And that's all going to depend on how far down it goes because I want my risk reward to make sense. So if risk reward makes sense, I'd probably get long on this to target a gap close. Right? Once the gap closes, the very first thought that comes to mind after the gap close is, do we get a gap fill reversal? Whether that happens through a double top or a head and shoulders, inverted hammer candle with volume, whatever signs are there that say I can get short on a gap fill reversal. That matches my trade plan, then I'm willing to get short on the gap fill reversal trade, targeting back to the opening print. So that's the standard gap scenario. If, however, we open gap down and we'll use the same opening price, and let's say that after open we attempt to go up, fails, then come back down below the overnight low, come into this gap, market internals are bearish, and we get a lower high inside this gap, then I would probably try to trade this gap close. There's possibility the entire gap doesn't close, so I'm selling positions on the way down, whatever. So that's basically the two scenarios if we open gap down and don't consolidate. Well, there is actually one more scenario. Let's say we open gap down right there and this happens. We open gap down, come up, get a higher low above yesterday low a day, then come up and get a higher low above 381. I mean, that would be a super bullish scenario. Possible, it could happen. Probably not my base case. If we do fill this gap, once we fill it, I am looking for signs that buyers are picking this thing back up and this becomes the higher low on the daily chart, and I start targeting 381 from that. If our bottom ends up just being the top of this gap, we open in range, come down, hit the top of this gap, and then like we reject it. So let's say we come down, do something like this, then I'm going to get long right there off something like that, trying to target 381. And once we get to 381, that does become the key level. You know, if we do get, this is not going to be in the just one day, this is going to be multiple days at this point. But if we do end up getting a higher low above 381, then I would think this is definitely the higher low on the daily chart, targeting all-time highs from there. So I think Google has a lot of opportunity right now, just sharing my. Okay, NVIDIA was a great trader today. Let's go over the best way to get involved if we were able to get in a trade for this tomorrow. And I think the best way for that to happen would be a pullback to 218.35 or a quick look below 218.35 that fails, then a higher low back above 218.35. I would definitely be willing to get long right there for at least almost equal highs up to 225.25. The other way I'd be willing to get long is if we just have consolidation between these two levels here, and then a higher low above 225.25. The other path it could take, which would be the less favorable, would just be a higher low above 225.25. All right, we are looking at Intel. With Intel, I am wondering, we open in range tomorrow. Can we retest this 114 level? Maybe look above it and fail, or reject it and then trade back down to today's equal low. Lower high below today's low a day brings in the 100 level. 100 looks like a decent place where buyers might try to defend this level. So do buyers step up at 100 on Intel and give us a higher low to continue back to the upward direction? Becomes the question. Or the other alternative, if we quickly recover 114 higher low back above, I would think that that brings in 124.50 on a look below and fail, kind of like it did back here. If you look over in this area right here, that's basically what happened there. Could we get a repeat of that? Looking at the Amazon chart, it's looking super bearish. I mean, Friday, we attempted to break above this 273.50. Breakout failed. We closed with an inverted hammer. Then today, we opened with a gap down below the 20 simple moving average, held the gap down, and traded downward all day. So if we look at the after hours right now, it actually has been selling off into the after hours all the way down to this 258.25. Go back to the daily chart here. 258.25 is a very critical level on Amazon. If any lower highs below 258.25, officially confirm what a big fat double top on Amazon daily chart. So any lower highs do open up the door for Amazon to quite a bit of trouble. If we look to the left-hand side, we have massive thin structure over to the left-hand side. So when we look and go look at catalysts going for Amazon, I mean, there's some European stuff, regulatory pressure, stuff going on. Of course, there's the CapEx spend fears, and Amazon is kind of lagging in Google on cloud growth. However, long term, I think Amazon is the company that stands to benefit the most for AI. So the question is, it started to look like the market knew that, and that's why it went up so hard. So I wonder, one thing to watch out for would be a look below this 258.25 that fails, comes back in, a higher low back above. That would be a sign to get long. However, the way it's really starting to look here, any lower highs below 258.25 do open up the floor for, potential more downside. My next target would be 250.25. If we open with a gap down, apply gap rules, same gap rules that we used in the Google trade idea. If we do come back up inside of yesterday's range, open inside there, then can we get a higher low and come up and close this gap? That could be a trade as well. Okay, we're now looking at the Meta chart. So, I mean, let's face it, we attempted to close this gap above, totally failed, fell back into this prior bounce range after a major failed breakout now. That's bad. Man, I'm looking at Microsoft, I'm looking at Amazon, I'm looking at Meta, and starting to wonder, is this market falling apart? You don't see it in the SPY and QQQ charts just so yet, though. But there's signs that the market's falling apart. There's still some rotation going on. I cannot stress enough to watch the S&P sectors. If they all turn red on any given day, especially right now with all this going on, watch out, watch out, watch out. So on Amazon, I mean Meta. Lower high below 601.30. Target gap top. Would not be surprised to see lower high below 601.30. Immediately drops into gap below, lower high into gap below, gap fill. My base case right now is Meta looks like it's probably going to come down and fill this gap. Does it happen tomorrow or the next day? I don't know. But after a big failed breakout like this, I would think that that's the next logical step. Especially we lost the 20, the 50, and the 50 SMA today, and we were already below the 200 SMA. I mean, looks bearish. I'm thinking about these gaps below now. So that's what we're looking out for. We're looking at the Microsoft chart now, and I'm only bringing it up because in terms of concerns with this market, okay? We do have a new leftover gap from today. Let me mark that. There was some hope left as of market close yesterday or today. And the reason being was, well, it opened on a gap up, it left gap up open, and it closed above the 200 simple moving average on the daily chart. However, if we look into what happened right after market close, it just totally fell below that, all the way back down to yesterday high a day. There's still maybe some hope, but I don't like that it got it above the 200-day moving average. And if we open down here, there's some concern with that for me. Doesn't mean it's totally over. Here's how we know when if this ends up falling apart, then I think the market might really be in trouble. If we fall back below like 430 on Microsoft, and you know how most of the market's rotating into software right now, if that happens, I think the market may be in for some trouble, some much deeper pullbacks if that happens. However, I'll still stay open-minded to this idea. Let's say we open up right here. I'd be open-minded to coming up and closing the gap. Totally fine. That's probably as far as I would long, especially with the 200 SMA right there. If we pull back to the original gap right here and buyers step it up, might be willing to take a long to close that. And then just really watch that 430 level to see if we do get to that level, do buyers pick it up there or not? That's kind of critical in my opinion. MU closed above 1,000 today. Seems like a reasonable spot for people to take some profit, possibly. So maybe we could at least see this gap close. Something like that. Wouldn't be surprised to see the gap close. Sorry about the weird lines. I'm going to go ahead and cut this video shorter. I'll never get anything out tonight. Once again, we are starting to see signs that some of this market might be starting to fall apart. I will be watching all the S&P sectors while trading tomorrow, the next day, and so on, to make sure that I am still seeing rotation into the market between sectors. If they all turn red, I'm gonna just watch out for that.
Watch the next one ride. Plan a trade, trade a plan. See you at the bell.